welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today's show where we'll help you understand all the latest cues on the D-Street, starting with the benchmark index moves to sectoral indices and all those stocks that are buzzing the most in trade, and what should be your own strategy on all of these stocks and much more amid the earnings season as well. We'll continue to discuss all of this with an expert, but first up, a quick check on how the benchmarks are moving as we speak right now. Well, most of the markets are, in fact, if you see, are lackluster again for another day. Flattish trade as far as the benchmarks are concerned. 17,659 currently for the Nifty, absolutely flat in trade. Look at the Sensex as well. It's just about 20 points lower at 59,707. Again, a very flattish move right there with the negative bias. Let's look at the broader markets to see if there is continuous momentum on that one, because yesterday, despite the benchmark index moves on the downside, it was the broader markets that continued to move up. Yes, they are continuing to do better. A 0.25% uptick for the small cap 100 index, whereas when you talk about the mid cap 100 index, you will also see some moves on that one too. Again, a similar move can actually be seen on the mid cap 100 index. That's up by 0.2% in today's trading action as well. Now, when we talk about the other sectors as far as the Nifty is concerned, a whole host of other sectors are going to be in focus again today, especially with the likes of IT industry, which is continuously dragging for the third trading session in a row. 1% down for the Nifty IT in today's trading session as well. So the declining trend continues for that one. Financial services are subdued today. Private banks are also declining a bit. PSU banks down by 0.4%. So the overall Nifty bank index is also slightly muted in trade. Now, when we talk about the other sectors, you're seeing slight move on the upside as far as the oil and gas, healthcare, realty pack is concerned, even the consumer durables for that matter. Autos are slightly up in trade as well. When we also talk about metals, for example, metals are in fact back at how 1% uptick. In fact, one of the better doing indices in today's trading indices, and the Pharma index that continues to move up 0.5% higher after that strong move that we saw on the index in yesterday's trading action as well. So 0.5% up towards the day's high for the Pharma pack as well. Let's welcome our guest on the show. Kranthi Bathini joins us from WealthMills Securities, Director of Research for Equities. Welcome, sir, and thank you so much for taking the time out for this discussion. Let me begin by understanding from you, how are you looking at the market move right now? We've been speaking about how there has been some consistent consolidation in the last 2 or 3 odd trading sessions as well. Where exactly do you see the Nifty forming its base before really looking at another leg up in the future course as well?
Yes, actually, markets are clearly in a consolidation mode, and we can see the consolidation today. Markets are, the pendulum is swinging between red and green with a narrow range. Uh, for the Nifty, for the downside, we need to see around 17,500. This is the level in the medium to short term. And for the upside, the resistances are around 17,800. This is the range market has to break on a higher range. And 17,500 we need to see in the for the downside for the Nifty in the medium to short term in next couple of weeks time. So overall, markets are in a consolidation phase, and markets have been waiting for some josh from the earnings season, which is not coming till now. That's the reason markets are stuck up in a narrow range. But most of the action is right now. It's more stock specific. We can see some kind of resurgence in mid and small cap space. This is where the main theme of the market is currently lying over there. Overall, the earnings season is we are just in the starting of the earnings season. Till now, the stocks have been subdued earnings season,
Yeah.
except bearing a couple of companies. So markets are in this consolidation phase right now. But it's boring if you see the charts of the market and trend of the market. But that's where whenever the boring seems to be in trading day, but that's where the opportunities lies always.
All right, be the markets boring, but there could be several opportunities that investors can continue to track. And one such stock that has been buzzing despite this overall muted trend in the benchmark indices is Zomato. The stock surged about 5% intraday today, and this stock has been in focus amidst the brokerage houses reports as well. Right now, it's trading about 2.2% higher, so it's off the day's high level and off that surge, but still moving in the momentum zone as well. About 54.5 is the level at which Zomato is trading at. Now, of course, there's always a lot of interest of investors across these new age tech stocks that had listed with much fanfare, when they had entered the stock market's fray. But the journey thereafter has been quite bumpy for that matter. But again, Zomato is on an upswing because brokerage houses are again looking at some positivity in the stocks going forward. In the stock going forward, we've got two reports. UBS and Motilal Oswal have actually come out with their reports on Zomato, looking at about a 30% upside from the current levels as well. Your own thoughts? 70, 80 target prices. Those are the levels that these brokerage firms are really looking at. Should investors looking for an opportunity to enter Zomato, is this the right time for them to really look at the stock? Have things really changed for the better?
Sakshi, after euphoric listing of uh, Zomato more than 18 months back, right now the stock found a bottom around 40 rupees 40 level. But right now, what's happening with Zomato is we can see some kind of significant correction in the stock price, and it touched a bottom of 41 rupees in recent past. Right now, the stock is trading around 50 rupees. The good things happening, the positive things that are taking place for Zomato is right now the internet penetration is going up, and the smartphone usage has been going up significantly in India. And right now, in terms of the food delivery business is concerned, there are only two players, the Zomato and Swiggy. So there is a duopoly is right now playing, and the presence right now of the geographical presence of Zomato is extremely important. How come they are going to get into the tier two cities, and the penetration should, how they are going to penetrate their business model in the coming quarters, coming days is extremely crucial for Zomato. And also, what the current consensus seems to be is they can get into a break even in the year FY25. That's where the everyone is looking forward. Right now, still only high risk appetite investors can get into these kind of business models at this point of time. What these new digital platform companies, what they have been struggling is profitability. Once they get into the profitability mode, we can see some heightened activity in these business models going ahead. But till now, you can see, you can expect a mid-teen returns from these business models as the stock has corrected significantly. So we can see some kind of 20 to 30% upside from these levels. Overall, uh, the downside is limited for these at this point of time, but upside also at the same point of time is limited for these business models until
Okay.
unless they become profitable in the coming quarters.
Okay, so the downside may be limited, and for investors who are looking, there could be about 20-25% upside from the current levels as well, because of the duopoly and several things that are working well for the company and for the entire sector as we speak right now as well. Although we will have to keep a keen eye on how the earnings really progress and the path to profitability. That is where the interest of most of the analysts and the investors would really lie, to really see consistent surge in the stock prices in tandem with the earnings going forward from here. So that's about Zomato. But apart from this, the other space that has been moving, we were discussing this yesterday as well, it's the pharma pack. I mean, that's again in momentum. We're also being seen, another, new entrant coming in. We're going to be seeing, we just saw the management of Mankind Pharma talking about their upcoming IPO in the press conference as well. 1,026 to 1,080 kind of a price band with about 4,300 crores of an issue size, and the valuation coming in at 43,000 odd crore rupees for this firm as well. Now, this is the fourth largest pharma firm in terms of sales, and especially with some kind of products that they have in their portfolio. They are also market leaders in that when it comes to consumer healthcare front, and their focus is also going to be on the chronic diseases and the products catering to that as well. Of course, pharma space is seeing a lot of action. Divis Laboratories, we were discussing yesterday, it's up even today as the top gainer, about 2.5% up at 33.49. Dr. Reddy's has been in momentum for last many sessions as well. Your own sense on how are you looking at the pharma space right now? Is there enough opportunity for investors looking at both short-term and long-term opportunities in this space?
Yes, actually, it seems to be pharma sector has been bottomed out. The kind of resilience or uh, resurrection what we are witnessing in some kind of pharma names, it seems to be the worst is over for pharma stocks. But earning season is the crucial thing, and also many of the pharma companies have to get their US FDA approvals. It's more stock specific, so all these uh, moving parameters, moving parts will make the pharma stocks going ahead for the upside of the companies are concerned. But it seems to be pharma sector, the worst is seems to be over in the medium to short term. Uh, so investors with a long term horizon, definitely they can think about the large cap names in pharma sector. It should be more stock specific. The valuations looks attractive at this price ranges across the pharma stocks right now. So investors with a long term horizon, they can get into pharma stocks. And also because the entire sector is in a downtrend for quite a long time, investors also they can get into sectorial funds in pharma to take the pie and take the advantage of the movements in pharma sector is concerned.
All right. And do you know one more space that's buzzing today is the metals pack that's shining brighter today as well. We've been seeing a long haul of an underperformance from this space as well. During the COVID time, we did see there was a period of about 3-4 odd months when we had seen the whole discussion about super cycle coming in as far as the metals are concerned. But after that, the rally pretty much fizzled out for a long time. And there have been continuous challenges worldwide which have not been able to give enough support to the momentum on the upside. How are you looking at the metals pack now? Why is it coming back in momentum? And is there anything that investors should watch out for here?
Uh, Sakshi, there are limited opportunities available in metal stocks right now. So investors need to stick to the large cap stocks only at this point of time because we still have the lingering effects of the global slowdown and the recession. These kind of worries still hamper the stock performance in the medium to short term. But the valuations looks attractive at this point of time. This is the reason some kind of cherry picking here and then. On a sluggish note, we can see some kind of buying activity in metal stocks are concerned. But overall, investors need to be a little bit cautious because uh, we still have these the global negative news that are hammering the stock prices in metal index is concerned. But overall, coming to the domestic market is concerned, uh, we can we the government spending has been going up with respect to infrastructure activities concerned, and also we what on the other hand we are seeing growth in real estate space in the domestic economy. So we can see some kind of activity in metal stocks with respect to infra spending and also the real estate expansion is concerned. That's how the metal stocks are currently bottoming out right now in India.
Okay, understood that. Well, thank you so much, Mr. Bathini, for being with us and discussing with us all these sectors and the outlook on that and the investor strategy for some of these stocks as well that are in focus. Many thanks for joining us, and we shall continue to touch base with you going forward as well. The markets are absolutely flat with a mixed trend right now. Nifty is slightly above the flat line, whereas the Sensex still in the red zone with about 7 points of a decline. But will things change in the second half of trading session? And will some of the pockets that are already showing some kind of momentum be able to pull both these indices out of the consolidation zone as well? We'll continue to keep an eye out on the market momentum, and you should do the same by being with us on Business Today TV. So don't forget to subscribe to this and also continue to engage with us on our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in. Well, after